You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out yet again with everyone's favorite bi-weekly options program. Yet it is time for the option block. Welcome to the show. Of course, you can join us live Monday, Thursday, noon Central, 1 p.m. Eastern. You can join us in the middle of the maelstrom like you do today, or you can join us after the fact. You're relaxing, maybe you're commuting, coming back from work, doing a workout, whatever it is you're doing while you're listening to us. Welcome. We like having you here. Of course, you can always send us questions as well via all of the major platforms. Also, play along with our polls, our questions of the week over there at Options on Twitter. We like to hear your thoughts. A lot of you guys playing along with the Apple one. Go figure, you like Apple. So maybe we'll put some more of those together for you. So a lot of good stuff to talk about and some crazy stuff to talk about on the old show today. And joining me to help me do just that, let's see. First off, let's go out to the hinterlands of Maine, where we are joined by the Rock Lobster himself, Mr. Andrew G. from OptionPit.com. Mr. G, welcome back to the show. What's this I hear about you doing double duty on my network today, sir?
I heard it was the thing to do. Plus, my old pal from the OIC, Joe Burgoyne, was hosting that show. So I always like talking to him. So
you're like, when the cat is away, I'm going to play. I'm going to double dip while Longo's not around here.
Exactly, because you weren't here, Longo, so we could talk about you. Although Jean was there, so she was making sure we didn't talk.
She was keeping a stern eye on all of you scallywags out there on the Woo Show, the wide world of options. Stay tuned to the network for that bad boy coming out soon. And then we're also joined, I believe, I don't know, we'll see, by let's see if it's by the magic of the internet, of modern technology, or perhaps last century technology, a.k.a. telephone. Let's see if we got him. Mr. Uncle Mike Tussaw, are you there, sir?
The thrill of victory, the agony of defeat. Is that going to be the theme for the world, the wide world of options?
It might be. With Joe and Andrew, you never know. Probably very darkly cynical, though, at the very least, because those two, not the most upbeat bunch when put together. look at locked away in their cynicism. So it sounds like you sound good, sir. It sounds like all of the connectivity issues have been resolved over there in the land of St. Charles.
Normally, I'm not superstitious, but I kind of wish you wouldn't have said that.
Okay, then let's just keep rolling. Let's just forget I ever said that. Let's just keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, where we discuss, surprise, surprise, what is trading? What is cooking? What is working? What is going on in the world of the old markets? And if you've been paying attention to this week, and if you're listening, you probably have been, then it's been a bit of a tumultuous one. We kicked off the week, they were shaking hands. Everyone was playing nice. Trade war maybe in the rearview mirror. Fast forward to a couple of days into this week, and Trump decides, that's too much. It's too much happiness and kumbaya going on. He had to remind the world that he is indeed Tariff Man via a tweet. That, of course, spooked everybody. Markets got into major panic mode. Selling off about 3% across the board. And then, of course, coming into today, we had a lot on the tape. We have OPEC meeting, of course, which we'll talk about a lot more on TWIFO coming up in about an hour and change. But we also have, of course, other issues like the arresting of the CFO of Huawei, which, if you know, is a big Chinese tech conglomerate, big phone maker, also very closely linked to the government over there. So picking up their CFO, they tend to look dimly on that, maybe seen as firing a little bit of another shot across the bow in the trade war, maybe a little bit more saber rattling, call it what you will, but all that combining to spook the markets yet again. We're seeing the Dow now off about 2%, S&P off right about 1.7 or so, and the NASDAQ was threatening with some maybe could turn around a little bit. NASDAQ being the Goldilocks of the bunch, or not even quite this, the recalcitrant sell-off of the bunch, only off about 0.75%, but maybe it was going to threaten to turn a little bit green. If you want green on the screen, you got to go to gold. First off, gold up about a couple of handles here, up about 2%, a little more 2% today, and of course, volatility. VIX cash right about a little bit shy of the 24 handle right now. Intraday getting as high as nearly 26, 25.94. So all of you who thought maybe we were in lockstep here for the inevitable erosion of volatility going into the end of the year, maybe a little Santa Claus rally, a little bit of VIX moving back down into the mid to low teens, VXX kicking into that high erosion gear. Well, Tariff Man said nay, nay, nay. To you as a result. So a lot lighting it up. Coming into showtime today, things were just tearing it up volume-wise. These have changed a little bit but we put these up a little bit ago. Coming into right before the start of the show, we have the most actives in the underlyings, equity options, obviously. Apple was about a little bit shy of 500,000 contracts, 434,000. That was our number one. Bank of America, a little bit more than 250,000. AMD, a little bit less than 250,000. That's 2 and 3. So AMD still lighting it up out there. Then you got Citi number 4 with 145,000. Amazon number 5 with 130,000. And then Facebook, Baba, GE, Netflix, and Micron. Good old Micron on there with Netflix and Micron both hovering a little bit shy of 100,000, take up 9 and 10. But on the index front, we're seeing a lot of paper lighting it up. VIX was threatening 500,000 contracts coming into showtime. SPY was over 3 million. Yes, 3 million contracts on SPY, listeners. That's over 2x the ADV. The ADV is at about 1.4 million out there. So actually, I think about showtime it had been crossed up to about 3.25 million contracts. So just crazy town, however you want to put it. Speaking of which, you guys both trade SPYs. Let's play a little fun game before we talk about what we're watching. I happen to have it open in front of me, which is kind of interesting. If you had to guess right now what the largest open options position in SPY is, with over 500,000 contracts just in this one contract, just this 1 month in strike, what would you guess it is? Let's have Rock Lobster go first. What's your guess?
I'm going to guess the March 300s.
Interesting, Mr. Tucson. What's your Spidey sense telling you?
I will say I think there's going to be a lot of paranoid fund managers out there, so I'll say the end of year 240 put.
Not bad. It is end of year. That is number one. And by the way, the 245 put is at about number 10, Uncle Mike. This regular D's. That's about 176,000. But number one, you got to go much farther up the old options chain. End of year, so D's 31st, listeners, 320 call. 530,000 of those bad boys open there. I'm going to be charitable and assume they were overwritten and done so for very favorable levels. Let's just be charitable. But probably not. 330 is also open too, 426,000. So maybe a bit of a 10-handle vertical. That would be a weird vertical, but we've seen weirder things. Number 3, the D, then it falls off a cliff. So that's about over 400,000 for each of those. And then about $250,000 for the D 325s, also 31st end of the year. Let's see, then 290 calls, number 4, 230,000. Round out the top 5. They only put in the top 5. The March 255 put, Mr. Uncle Mike. So yeah, we got ourselves some bulls in SPY land out there. Yeah, we're about 265 out there in SPY right now. So you got a ways to go before we hit any of those contracts, 320 in particular. But since Uncle Mike, since you're our resident bull and you like those end of year 320 calls, we'll start with you, sir. What is lighting up your collective tape? Not just today, maybe, but this week, as we've seen a lot of tumult in the markets.
Yeah, tumult to say the least. Macro is the big story right now. This is coming on very scary macro news. I mean, the other one was with the inverse yield curve between the 2-year and the 5-year, I believe it was a couple days ago. And then right now the big news is how is this arrest in Canada going to affect the trade talks between President Trump and China? So we have that going on. One thing I just want to remind people of is that politicians don't get reelected when we have sharply bearish markets. It just does not exist. It does not happen typically. I mean, it could happen, I suppose, but typically it does not. So politicians like bull markets. And because of the fact that something political made this market go down, that makes me think that something political could make this market go higher again. And if that's the case, then typically that makes me think that it won't be tomorrow. It might not be the next day, but I do think at some point we will come up with some type of a trade deal. And Trump's going to be touting it as the greatest thing ever. The right-wing news will be supportive of him on that. The left-wing news is going to say how it was a terrible deal and they're all lying to you and that it's not a good deal. And I think that's going to be the world with which we live over the course of the next few months. I'm predicting that the big debate that's going to be coming out probably in the spring is that, number one, I think there will be a trade deal. But number two, there's going to be a big debate going on, was it a good deal? Was it not a good deal? The right's going to say it was the best deal ever. The left is going to say it's a horrible deal. So that's what I think is going to happen. And I think the market is going to benefit whatever side of the political aisle you're on. Not trying to be political here, as I typically try to avoid such conversations, quite frankly. So that's kind of what I'm looking at and what's lighting up my tape. Now, the concern that exists is that inverse yield curves are very real typically in terms of them predicting upcoming recessions, at least from my experience. Now, with it, typically from more of the fear is oftentimes not the 2-year over the 5-year, but if we can get an inverse yield of the 10-year over the 30-year, that's something that is typically more of a scary thing, so to speak. Is it a guarantee that the market's going to go one way or another? No, not at all. But I would be a little bit more reserved on pulling up the panic flag until we actually saw those two at inverse yield curve for a consistent amount of time, not just a couple days, but just for a longer period of time. So we have that. And then the other thing that I think most investors are thinking about right now is this a buying opportunity? And long term, there's no doubt in my mind, I shouldn't say no doubt, there's very little doubt in my mind that from a long-term standpoint, this is a huge buying opportunity. But if you're as a short-term trader, well, that I don't know. What I'm doing right now, and what I think a lot of people should be doing, is using options. If you are a bull like me, I should say, not a lot of people, but if you are a bull like me, I think that, and you want to get some exposure to the upside of this market, I think spreads are a great way of doing it. You can mitigate volatility risk, call spreads, that is. Perhaps doing a bullish call butterfly would be another way with which to do it. But the one advantage that we as option traders have that stock traders do not have, we can put small amounts of money on the table and have them become big amounts of money. Now, of course, the trade-off for that is that we have Expiration Friday that comes every week, or just depending on whatever time frame you use. So that's the trade-off for it. But I think the main thing, the edge that you have you, of course, if you're an option trader, that a stock trader doesn't have is that you can do very specific amounts of risk. And the feeling that a stock trader gets, oh, my stock is down 8% right now. Should I hold it? Oh, it's going to get worse. Oh, it keeps getting worse. And you have that horrible feeling in your gut. As an option trader, you know that if you're one of those people that have a hard time getting out of something, then you just buy your spread or buy your call. You know, well, it's going to do what it's going to do. And even if I lose everything, I only lost a little bit, assuming you manage risk in the right way. Now, if you put your whole portfolio, your whole net worth into call options, well, that's just quite frankly stupid. But if you're managing risk in the right way, now can be an extremely powerful time to be an option trader if you manage risk in the right way. That is what I am looking at right now, Mark.
Oh, excuse me. I have to go for a minute. I have to unwind my entire net worth in these upside call verticals. Let me go for a minute. I'll take off some of this and I'll be back. Okay, how's that sound?
Got it.
All right, Mr. Rock Lobster. By the way, if you're looking at all we talking, you don't get political on the show, obviously, but the numbers are out there talking tariffs. The numbers are in now for October, and all of this trade war ostensibly aimed to mitigate the trade deficit between us and China, but in the near term, it is indeed exacerbating it. Jumped to a 10-year high in October. That's what the Commerce Department telling us right now. Soybean exports obviously continue to take it on the chin. The increased 1.7% to $55.5 billion. That's the highest level in about a decade. October of 2008. It has been widening now for the past 5 straight months. So in the near term, at least, as every economist will tell you, trade war is not exactly good for the economy, and we're seeing that lining up in the marketplace right now. Mr. Rock Lobster, what are you seeing lining up in the old marketplace today, in addition to eyeballing that near 26 VIX today, sir?
I am looking at, I think, by the way, what Mike said about call spreads, this is a great call spread time. Vol super high. I think there is opportunity. I think especially in tech, as in like chips and stuff like that, chip stocks that just got pummeled. So I think that is a good opportunity. As far as VIX goes, I have to say, given we've had back-to-back 2% moves, I think VIX cash is a little underwhelming. It's higher, and it should be higher because the realized vol is like 40%. So VIX should be trading 24, but it's not out of hand. And we're in that kind of that more backward phase. So those futures are still trading at quite a discount again. So there's a lot of what I would just call funk in volatility right now. So when I look at it, I go, okay, so the market, at least for the market for vol, they're pricing higher volatility because we're moving more, but it's not as bid as it could be. And it seems like it's having a hard time doing that. Now, the one thing is 25 vol could stay around maybe for a while. At 24, 25 VIX, it could hang around. There's no reason for it to go away per se, because, if we're going to move 2 or 3% up and down and all over the place, that's just a more volatile market. So VIX can stay here. Those futures are still trading at a discount, and at a pretty sharp discount right now, probably 4 points. The last time I looked, I got to look again one more time. Let's see. I'm looking at 24. So 22 cash future. Yeah. So, I mean, a pretty good discount, $2.50. So I think it's, at least for the short term, vol, the opinion is 24 vol. I think VIX is not super high for what we've got going on. And the backwardated futures are looking for a lower volatility in the near term. And the last thing I will say is, from a VIX, looking at VIX, very flat curve. And usually the flatter the VIX cash curve is, the more uncertain everybody is. So we have a 1970 July and a 2130. So we only have like $1.50 between December and July, which is a pretty flat curve. It's not valuing time at a whole lot. So just the way this curve looks, I expect just more of this movement. It's not, that curve says we are going to keep moving. We don't know how long and how hard, but we are going to keep moving. So I think that's what we've got. and I don't think it's going away anytime soon. I like the idea of what Tucson said about politics. And, it's sort of like Trump giveth and he taketh away. And I think this could set up for like a big spring, rally or something like that. And we'll see what happens. But this is like perfect storm. You've got a lot of Europe, Italy fighting over the budget. You've got interest rate worries. You've got the G7 deficit. All of a sudden, everybody's like, okay, now interest rates are going up. Money's going to cost money again. Oh, what a shock. So there's still a lot of stuff in the system that is worrisome. And the fact that U.S. and China can keep clubbing each over the head with, the trade shoe. So I was saying, I don't think the 25 VIX is too high given what's going on, not by a long shot. And just the way the vol's pricing, it's pricing more vol to come. So if you like what you saw today, stick around because it'll probably be here tomorrow.
There you go. If you like yourself a mid to high 20s level in the VIX cash, then yeah, we might be flopping about, particularly like I said with realized vol at these levers. If you guys like some more micro, there are still some earnings popping off. We have the full breakdowns over there at theoptionsinsider.com. By the way, for those of you who are looking for archives, we have some backlinks up for you guys. So if you want to go dig into the web archives on our site on the radio landing pages, you can do that again. Just head on over there, click on those links. You should be able to find the ones you want. Most of you still like to get it via your platforms of choices like your iTunes and things. That's always been fine, but we've been tweaking some stuff. So those archives should be in place there. If you want more or have questions, just let us know. It should be, all this is paving the way to perhaps a brand spanking new, beautiful Insider 5.0 now version, whatever this is now, coming up pretty soon. So stay tuned for that as well. A lot of good stuff coming on the online front. But speaking of which, if you go to the website, you could see things like the earnings movie reports from our friend over there at Oratz. And they cranked out a lot of names today. We got Marvell on there. We got, if you're into the dollar store, but maybe the premium dollar store category, then they got you covered here today. The $5 dollar store, aka Five Below. Let's see, they were popping off yesterday after the bell. They closed right around 104.5. They were pricing in about $7.50. They actually delivered about a $7.85 move, so that to the downside, of course. So they were actually pretty fairly priced. Today, it's only off about 5%, a little over 5 handles, right around 99.5. So apparently things are not rosy in the premium dollar store category, which I guess you probably can go figure given the state of the current market and the economy. Maybe that premium level of the dollar store wouldn't be tearing it up. And that apparently is the case. We also have Marvell Technology Group, not Marvel, not the cool Marvel Comics. Nope. Marvell Technology with 2 L's. This is $16 and change today, up $0.50. They were popping off after the bell on the 4th, and they were trading right on 15.5 at the time. And they were pricing in a whopping 80 cents. They delivered 17 cents. So a little bit of an underperformer there on the earnings. They got a bunch more names like that if you want to break them all down. See all the data, all implied vol, expected vol, the premium, discount, all that kind of good stuff. Check it out over there at theoptionsinsider.com. Meanwhile, we got to keep on rolling. It is time to get into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
By the way, before we even get into the odd block stuff, I think we buried the lead here today, Mr. Rocklops and Uncle Mike. I think the real reason the market is just selling off so hard this week is because everyone realized that Netflix spent $100 million to run Stream Friends for a year. They spent $100 million for the rights to Stream Friends for 1 year. It was already costing them $30 million. They decided we'll pay about 3x that to stream it just for 1 more year. And the market's like, what? And so everything tanked as it wasn't Tariff Man. It was Friends that really crushed the market. There you go.
I'll be there for you.
Yes, see, apparently Friends was there for us all the way to the downside to the tune of 3% earlier this week and another 1.5%. So you can blame Chandler and Rachel and Ross for all this red on the screen, not Tariff Man. Let's go on. Let's see. Speaking of red, let's see what we got here over in our old friend, the T-Man, a.k.a. Tesla. They're actually bucking the trend today, up about 2.5 handles or about 0.75% to the upside. One of the few notes of green on the screen today. 362.25 today, getting as high intraday, right around 366, pretty much actually 366.30 they hit. So about 4 handles north of this today. So Tesla was feeling the bull here today, talking about their Chinese factory. I guess could be running in a few months. That's enough to give people some love out there. But we're not looking just at the love. We're looking at all of it, including our old friend, what's lighting it up on the downside here. Let's see if they are lighting it up today. Do our old little scan of the downside here, brought to us by our friends over there at Trade Alert. And they're looking, let's see, our old friends at Jan 50 is about 1,000 of them. Someone hitting the bid for 3 cents. So maybe someone finally getting the heck out of Dodge on those bad boys. They've been all over the place. If you've watched that saga with us, listeners, and you know you have, they've gone all the way up from about 30-odd cents up to close to $3 and now back down to 3 cents. So perhaps someone deciding to discretion, the better part of valor there. Let me see if I could I'm not getting the history for some reason, but I want to see if I can get the current OI on that. I guess I can't pull that up for now. But yeah, that was and has been for some time the largest open interest position still in Tesla land. 500 lots of the 15 puts, 13 puts going up, 1,000 of the 13 puts trading today. Actually, 1,500 more. So 13 puts appear to be where the action is today, not the 50 puts. So for 2 cents. So I don't know if you're going to take the 50 puts for 3 cents or the 13 puts for 2 cents. Which of those two would you go for? I think I know what I would go for, but someone clearly is going for a boatload of the 13 puts today. Those clearly are where a lot of the action is today here in Tesla land. Now let's move over to what our Eye of Sauron landed on today. Remember, we're always watching here, listeners. And we're going to kick things off in a newcomer to the odd block. This is Signet Jewelers Ltd, ticker symbol SIG, S-I-G. Trading today, not having a good day, $41.90, off $8.13, or a little over 16% on the day. So they're getting, I think the technical word is slammed. And so not surprising then that we might see maybe a little bit of put love out here in Signet Jewelers, and that is indeed our big print of the day that was coming up on our radar screen. In particular, it was the Dees 35 puts. Remember, I said they're trading right a little bit shy of $42 right now. The 35 puts are lighting it up today. A big block of nearly 13,000. Picking them up for 55 cents. Not quite devouring the offer, though, as you might expect, given the aggressive sell-off on it. You maybe have some panic buying. Got to get these. These things were pretty wide, though. They were 25 cents at 70. So someone coming in and not quite lifting the offer, but paying up for probably the real offer around 55 cents. And he got 13,000 of them there, pretty close to it over there on the Philly. This is all opening, I should say. Not much OI there to speak of. We mentioned earlier they did have earnings. Let's see really quickly. I do believe they're on the earnings move report. Yes, they had earnings before the bell today, actually. They were trading at $50 going into the earnings, 50 even pretty much, and they were pricing in a $6.75 move. They ended up delivering about $10. They're off about $8 and change now, so obviously over-delivering to the downside. Clearly not a bullish day here for this jeweler. And yeah, interesting stuff. You can look at more details of that on the earnings move report. And let's look out ourselves here for a year and see what's been going on in SIG. A year ago, it was trading about $51, so a little bit north of where it is right now. Then it dipped down to 35, and the 52-week low is actually 33.11 back in that kind of April to June kind of time frame. And then it rallied again back up to 67 and change back in September. And now it's off yet again, 20-odd handles from there, down to 41, 42 again today. So it's been a topsy-turvy year here for Signet. It looks like someone, Mr. Rock Lobster, it appears someone may be deciding that they're gonna stop themselves out around that 35 level, which is also an interesting level, pretty much right at about that 52-week low, a little bit above it. What are you feeling on these? Maybe you think this is someone aggressively selling. What's your take on these bad boys, sir?
I'm looking at this stock and like, hell, even though even how they just price out, I'm thinking this. I still want to think that this is like a line. It's pricing like a little higher. I wonder if this is a line in the sand put. That's what I'm asking. Even though it's pricing on the, it's pricing more like a protected put. It does feel a little line in the sand like for me with where the stock is.
I was kind of getting the same whiff from this too. I don't get the feel of a protect. If it is, that's an odd choice, which is why it's the odd block. I like it a lot better as a line in the sand put, I think.
I think so. I mean, with the 35 puts, I mean, they're already offered lower from what I think so, if I'm looking at the screen right. So they trade 55, and it looks like the market's 30-40 on the D's 35 puts. So it has the whiff of somebody's like, you know what? I'm gonna take some delivery on this bad boy, and which is how you trade puts. I think you could take that from the Doing Stuff from the Two-Saw book. I mean, you only sell puts if you can afford to take the underlying. That way you won't be grumpy and miserable your whole life. So I think this looks like let's just call it a value buyer. I think this is a value. It's just what it feels like.
Yeah, based solely on my cursory 1-minute examination of the 52-week chart, where I would have to say I would definitely probably much better be happier, selling those at that level and picking up the stock there than trying to stop myself out at that pretty much 52-week low, unless this thing has really plumbed some more aggressive depths. That is certainly possible. But it is always odd to me if you see these, if it is indeed an equity holder stopping themselves out, they pick that level to do it. That's an interesting one indeed. So yeah, I was kind of getting a similar feeling that, again, the execution is a little wonky. And again, they can always play with those numbers, listeners. They could be tied to stock and a bunch of other things that could give them a lot more wiggle room within that bid-ask spread to where they actually print the options. Isn't always indicative of what the heck they had going on, especially with a spread that wide. A lot of wiggle room there. To put up a print. I mean, they got a good broker. They got someone to come in and, hey, we'll pay 55 cents for those. And they said sold. So, yeah, there's a lot that could have been going on there. I'm with you, Mr. Rock. I think it just feels better. The spidey sense is making me think it is that. And I'm going to be charitable and assume that's what it is. We're going to also put, those are D's. Those are pretty close. So we're going to call those in the to be watched file. And we'll come back to these and see how our friend in Signet Jewelers has fared. Meanwhile, let's go over to another new name. This sounds like a straight out of the Terminator, Teradyne Inc. What's the name of that? Cyberdyne is the name of the company that creates the Terminators. This is pretty close, Teradyne. Ticker symbol TER. This one trading $33.13, off about $1.30 or about 4%. Another one not having the best day out here. And this one, and not surprise, also lighting it up on the put side. A little bit longer term than D's, going out 1 month farther to Jan. In particular, the Jan 34 puts, lighting it up for $2.30, pretty much right on the offer, nickel below it. They're about 35 cents wide on these bad boys, going up, where do they, up on NAM, the NASDAQ options market. They're 3,020 times, I should say, for $2.30. So it looks like an opening put by. Let's see how this thing has done over the past year, and maybe that will inform us a bit. A year ago, it was trading almost exactly $40, so about 7 handles north of where it is right now. Got as high to about 50, almost 51. This is back in the March time frame. Then it kind of sold off dramatically into April, actually. April got down again to about where it is right now, 32.5, almost exactly where it is right now. And then it bounced off those levels, got back up to about 44 or so back in August, and then sold off again back to 30, actually hit 30 and a quarter about back in October. So that's the low, 52-week low, or going back about a year. And then it's kind of rallied a bit since then. So it's had a topsy-turvy year yet again. Looks like someone coming in deciding, they got a little spooked maybe when it hits 30 and a quarter, threatening to break the 30 handle, and decided, 34 in the money puts now, an interesting choice. $2.30. So these are kind of rich. Again, that's why people don't usually opt for the in the money puts. But they're deciding to stop themselves out at the 31.70 level here in this case. An intriguing choice. Again, this is opening paper. And they have earnings on the 23rd. So I do believe that is after expiration, so not quite an earnings play. Mr. Rock Lobster, what say you on these bad boys, sir? You feeling a little bit of protective put love here in the similar to Terminator Teradyne Inc.?
I this is one of those things that I traded this stock probably 25 years ago.
So you're responsible for the rise of the Terminator. It was your fault.
I'm feeling old, I have to say. Old. But anyway, as far as this goes, this is another one like, okay, this has me again a little puzzled, but I'm still feeling people are coming in here and they keep pricing to buy these puts. However, I keep thinking they're line in the sand puts. Actually, these are line in the sand puts. These are more like I'll take my 7% yield to January by selling these puts and trying to grab the bottom. Vol's high enough, and the market's kind of doing that thing where, they don't have to book anything this year. They can book it next year. It just has that feel to me. People rarely buy in the money puts like that. Just to get short. I mean, I know that's what you're supposed to, but as even trading, you did not see that. Who comes in and just buys in the money puts? So I'm still thinking this is I hate to be a broken record, but again, it doesn't price like that. It prices like more on the buy side, but I'm just not. I'm not seeing the. I'm not seeing enough of the reaction out of the stock, I guess. So it figures somebody buys those puts, the stock should be down a bunch really fast, right? And it's kind of just sitting here. So.
This is why it's fun doing these kind of live hit odd blocks, because we never know what's coming on, and we get to kind of parse it live here. Yeah, this is kind of I guess you can call it a kind of somewhat dubious odd block here, where the prints are maybe not indicative of what it seems like. Because you're right, I could see it that way. It would be that would explain the choice of the in the money strike. That would make a lot more sense in that scenario. Again, the execution speaks otherwise, but we all know the execution can be lies often. So just going on that. But this one is pretty near the offer here. Again, we'll have to dig up some stock. But interesting. Well, let us know what you think, listeners. Are they hedging? Again, the levels are kind of dubious for a hedge as well, because they're getting close to that 52-week low. Another one where, why would you hedge where you've already given up most of the ghost? But maybe you have other thoughts. And maybe you've traded Teradyne 25 years ago, too. Let us know here on the show as we move on into our final name, Eye of Sauron. Always watching, always scanning, picking up. Looks like some opening Feb call of to round us off here. Going back to the call side now in Lennar Corp. This is a home build. It looks like they have some news today about some of their title businesses are merging together or something. That just came out about 40 minutes ago. So maybe that's why the stock is feeling a little bit of a lift today. Trading, ticker symbol LEN, L-E-N, by the way. Trading 42.25, up about $1 and change, or about 2.5%. And what we saw today, given all this just joy in, one of the few greens on the screen today out here, we're seeing the Feb 40 call. Again, another interesting choice in the money. Feb 40 calls, lighting it up, kind of a little bit mid-markety, a little bit more so there for $4.15, 2,816 times. Again on NOM, a lot of prints coming up on NOM today. The NASDAQ options market, lighting up the old tape here. They were 4 to 4.25 when this print went up, so slightly towards the offer. But again, you never know with these bad boys. They do have earnings on the 10th of January, I should say. So there is an earnings cycle built into this print here as well. Let's pull up a little chart here of good old Len and see what it's been up to over the past 52 weeks. A year ago, it was trading about $61. Then it got as high as about $72 right in that period in almost exactly about 11 months ago, January 23rd, late January. It hit 71, or actually the high was 72.17 in that period, intraday, it looks like. and then it kind of just sold off again back down to 60. And it kind of vacillated around that level for a while before slowly eroding back down into the 50s, and then hitting a low of 38 and change back again on October 24th, like our other name, and then rebounding a little bit here to be in the low 40s right now. So maybe someone feeling, Mr. Rock Lobster, that the worm has turned here in Lennar Corp, and they want to get themselves some juicy, expensive upside here, $4 upside in the money upside. Again, in the money choices. That also makes this a little more fun, a little more interesting, a little bit more puzzling of an odd block here today. I don't see a lot of people playing for size, meaty calls and puts like this, but we're seeing it today. Also, the execution, a little bit of a question mark here too, which makes it all sorts of fun for us to parse these bad boys. Again, looking like open and upside call love, but maybe is your spidey sense saying nay? Are you going to go 3 for 3 on taking the opposing side, sir?
I'm thinking about it. I just think this feels like a day where people that want to buy stocks are saying, this is a good day to buy stocks. I'm always going with the, right? It's not like I invent something. It's just Warren Buffett likes buying stocks when they're cheap. So I think that's usually a good time to buy them. So this Len, do you know that Len's roommate was Squig?
I did not know that. That's old school. That's a Milwaukee. We don't do Milwaukee jokes here in Chicago, sir. Those are offensive.
It's like
jokes.
Everybody's like, what the heck?
Like, what are they talking about?
Squig?
What is this weird spin-off of the Happy Days show that they're referring to?
I'm just, you know what? I only cracked myself up, unfortunately. Unlike
that's what we call Maine humor, folks.
Just not very good. This is I'm going to say call buyer. And these housing stocks are always, such cyclical beasts, It's hard to believe that anybody buys these damn things when they're at the top, but they do. And I don't know, what was Lennar during the housing crisis, like $6 or something, or $4? So it's down a bunch. I just think this is a scoop. Maybe that interest rates aren't going to go up as fast as people think. So it has that narrative feel about it. And again, with a stock like Len, you're not going to buy the 60s, right? You're going to buy the 40s and look for maybe $1 or $2, $3-4 in the stock, and then you make some decent money on the calls. So this feels like a call buyer looking to just get long on a down day.
Back on November 14th of 2008, it was trading $6.18, sir. These are a comparatively optimistic scoop by comparison. They're going for, what are they going for? The 40-odd strike here. Yes, 40s. So there you go, listeners. Some interesting one. We're going to put that in the to-be-watched file, too, to come back and keep an eye on that boy. Meanwhile, it's time for us to keep an eye on what the heck you guys got going on. It is time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys ask us questions. We ask you guys questions. It's a whole question party palooza. Call it what you will here. And a lot of people chiming in. You guys all chimed in on our Apple option poll, by the way. It is closed now, so you cannot play along anymore. Maybe we'll do a new one later. But we asked you guys right around Apple hovering at the 175 strike when we posted it. Let's see, how are we looking right now? Apple 172.80, off about 4 handles or 2.25% or so. At the time, hovering right around 175. We asked you, we want to sell those Jan 150 puts for $1.65, buy them for $1.65, or sell or buy the Jan 200 calls. Pretty much the percentages gapped up and kind of stayed right around. They moved a little bit, but people kind of pretty much stayed in line right around the low 40%, and pretty much went out right around 42% for selling that put, 25% for buying the call for $1, and then 21% for buying that put, which looks more reasonable now, and 12% for selling that call for $1. So 42% of you saying you want to, as Mr. Rocklopster says, take some stock at around the 150 level, which is hard to blame you. given that, even though your counterpart there, I think the meatball said if it broke 150, he'd be more spooked about it and wouldn't want to touch it. So he's probably maybe he's in the buying put category, I suppose, of that one. We also got people chiming in. Who we got? We got our buddy Ophir there sending in a chart of VIX. Looks like a Fibonacci with the 50-day moving average, the 10-day moving average, and everything. At the time he printed it, the VIX was 2410 in the cash. And he said, if this was a stock and I had this chart, I would be bullish. But it's VIX. So there you go. Yeah, it's kind of funny because you're right. That's why people always joke to us about trying to use technical analysis on the VIX, and we have to explain to them that it's kind of a different beast, plays by its own rules of engagement. Ophir obviously knows that. He's just joking. But still, yeah, that chart, if you just first glanced at it, you'd be like, oh, man, this stock's on a tear. Got to get me some of that. Then you realize, what the heck we're actually talking about here. It becomes to a different conclusion, perhaps. Let's see here. What do we got? Daleon wants to know, hey yourself, Daleon. I'm something of an options noob, but I'm learning from listening to you guys. Well done, sir. Keep plugging along. He goes on to write, still haven't pulled the trigger on my first trade. My question, what's the best and easiest starting point for noobs? I mostly have a SPY in my portfolio right now. Is it selling calls on SPY? And am I correct that those calls would be considered covered? Fun show. Also like in the playbook program. Well, there you go. Man of discerning taste, clearly. Yeah, a lot of good questions there. We get similar threads on this every now and then. What's a good starting point? But you kind of laid out a lot of it for us there. You do trade a lot of SPY, so that's a name you're clearly familiar with. So probably starting on SPY is probably a good bet for you. And I'm not averse to you having a covered call be your first trade, provided, of course, your question implies that maybe you're a little bit confused on the what the meaning is. So maybe I would urge you to familiarize yourself with what a covered call actually is first before you do it. Of course, our Options Bootcamp show will do that for you. Option Pit Boys will be glad to help you with that. Optionseducation.org. Our friends over there at OIC can also walk you through that. I'll call up Uncle Mike. He'd be happy to write the covered call for you and explain kind of what it is. But yeah, you should understand what the covered call is, how it's risk equivalent to a short put. So if you're scared of short puts, maybe think about that. But in general, if you have a bunch of SPY, you're not worried about selling it out at a certain level. You don't have any tax consequences of that as a result, and you want to harvest a little bit of income on that portfolio you already have. I'm not averse to that. Mr. Uncle Mike, I'm guessing you do a lot of SPY call, right? I'm just going out on a whim and guessing. What do you think about that for a first options trade for a self-proclaimed newbie here? And then B, what do you think about this guy maybe doing it?
Well, I think that the covered call is a good way of starting a lot of times, because then you kind of get a feel for what it's like to be short an option. And it's one where you don't have it's difficult to have a lot of leverage, assuming you don't buy the stock on 50 to 70% margin or whatever. It's good because if you have the stock, there's not a tax consequence, meaning it's in an IRA, or you just don't care about paying the taxable gains on it. It just depends on where you're at with it. But the bad part about it is that it might not be the ideal trade to do right now, because if SPYs come down a little bit and you don't want to sell it right now, then doing a slightly out of the money covered call wouldn't be the best thing, I don't think, if you're concerned with selling it right now. But if you're happy with the strike price that you sell the covered call at, meaning you're looking at it, you're like, well, if it gets up to that, I'm fine. Or if I sell it at that price, I'm fine with it, so long as I get this premium, then I think it's a great first trade to do, depending on your overall financial situation, of course.
Yes, the caveat being obviously that you did your due diligence and you're happy with the levels that you're selecting in terms of strikes. Then yes, I think that's a given caveat. We should reiterate that. That's good. Mr. Rock Lobster, same question for you, sir. What do you think about our friend here? What's his name? Daleon, diving into the covered call fray on SPY.
The covered call, I mean, that's a start. I mean, if you're long, the thing is, the covered call is not going to change a whole lot for the way you have your SPY position. It's not really going to change much. Vol's really high. It's 1 year highs pretty much. So if you're going to write one, now's the time. So what I would recommend is just you want to only write calls when it really is worth doing so. So you have to think to yourself, okay, well, we were at 2280 Tuesday, right? Or Monday. So what do I want to sell that I think is worth, so I always try to look at kind of like where was the market that last kind of high point, and then you look at that spot and say, okay, well, that's a good spot for me, and that's where I'll sell a call. How much money can I make selling that spot? That way, you just don't waste time selling a bunch of calls that you're going to have your stock taken away. So the whole idea of selling calls is you want them to go out worthless. So just keep that in mind if you're going to do the call selling routine.
Maybe even more generally, what are your thoughts? It sounds like Tusaw is okay with it. What are your thoughts on covered call in general as an entry point for option? Would you prefer to have them maybe do something long premium first to get a feel for that and a risk mitigated, they only can risk what they pay kind of thing? Or do you think the covered call is a better way to go?
Well, I think most people are kind of comfortable with owning a stock. So I would say it's the next step. The hardest thing about people buying options, I find, like teaching about trading options, is just having a real good sense of closing the trade. So you have to have a predetermined place you're going to exit when you buy options, because you fall in love with the P&L. Oh, it's going up, it's going up, it's going up, but everybody forgets, like Mike said earlier, they have short time frames. They're dates, they're not marriages. So as soon as they make a move and you make some money, you have to get out and be happy with it. So I would say if you're going to buy options, you have to work on that exit. But if you sell a call against stock, your exit's predetermined pretty much. You're either going to be taken out or not. So I think it's one step easier on average for the average person.
And unfortunately, our exit is predetermined as well. We got to get moving towards it. It is time for our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. I think you kind of know what we're watching. This is kind of a bit of an easy one. Obviously, it's all macro all the time. Will they? Won't they? What will they tweet next? Who will they arrest next? What's going on with the yield curve? It's a lot of the Meister would be very happy on this show. It's very macro focused, which for him certainly would be a pleasure. But we're in one of those environments again where we don't know what the other shoe is or when it's going to drop. So a lot of that being spooking people. Interestingly enough, we'll get to a lot of this on TWIFO as well coming up in a bit. But some of the indicators coming out there now with the Fed watch, now they're saying all this spookage in the market, for lack of a better word, maybe dropping some of the predictions that the Fed's going to stay on its path for continued raising, maybe going to back off that a lot. People have been speculating that for a while. Now it looks like we're seeing that starting to line up there in the marketplace, which is of interest to us. Let's go back around the horn, see what everyone's focusing on in particular. Let's go back the other way. Let's start with ye old Uncle Mike. Sir, what are you fixating on for the rest of the week into the old weekend?
China, and more China, along with people from China who are getting arrested in Canada. I want to see how that plays out. I think that's going to be something that's very important. Right now, we're back to the similar levels as to where the S&P started the year at. This acted as kind of a level of support a few days ago for the markets and shot it right up. But we'll see what this acts as going forward. I think we are at a very key level because of the fact that we don't want to go negative on the year. Assuming you're bullish, of course, and watching the key levels as well as what's going on with China.
What if China decides to retaliate and just like gobbles up Tim Cook on his next swing through Asia or something like that? How the trade war could exacerbate in such a short period. What's the old Will Ferrell? So that escalated very quickly. Mr. Rock Lobster, same question for you. What are you keeping an eye on, sir? Maybe this ever dancing, ever moving, ever evolving VIX.
I think it's going to keep moving, evolving, and dancing until this trade war thing is done. And didn't they just say they put on a 90-day expedited chat on it? So I think we're going to be bouncing around, and there's going to be lots more buying opportunities to come. until, something is settled. Vol is here for a reason, and for whatever reason, everybody's decided to get their panties in a bunch over this. So it's going to stay like that till it's not.
Not exactly sounding too optimistic for the end of yield trade. It looks so good at the beginning of the week, and then not so much. We'll keep an eye on all sorts of fun things. If you'd like to get more into all that fun stuff, we got another show coming up for you in a little bit called Twifo. So if you're listening live, get a beverage, have a relaxing maybe have a little lunch, little bathroom break, come back in about half an hour exactly. Fun note, going to have the return of Dr. Vix, a.k.a. Mr. Russell Rhodes, coming on that program. Going to be joining us to talk of all things futures options. How crazy is that? Worlds colliding, dogs and cats living together, mass hysteria, all sorts of fun stuff. So stay tuned for that over there on Twifo. If you're listening on podcast, just hit the next show in your feed. You're good. You're already covered over there. Let's go back around the horn. Mr. Uncle Mike, we'll start with you, sir. If folks they want to go click on the Fox, where should they go? What should they do?
By all means, go to stcharleswealth.com if you are interested in learning more about what we do. I'd love to have some clients who are not afraid when I tell them about time decay, and I'm looking for clients who are looking for advisors that are not afraid of the word theta. Give me a call. Click
on the Fox. Sign up for the man's newsletter. By the way, Mr. Uncle Mike, like seconds after the last show, I got hit up by one of our frequent writers inners, J3 Dingle, who sent me a screenshot of him having subscribed to the St. Charles Wealth Management newsletter. So there you go, listeners. Head on over there. Click on the Fox and sign up for the newsletter. See what Uncle Mike's got in store for you there. Maybe he'll talk a little theta, a little gamma, a little rolling calls, covered calls, and SPY. You never know. Check out the newsletter. Sign up for yourself, stcharleswealth.com. To learn more, click on the Fox for all sorts of fun, magical surprises. And Mr. Rocklops, you guys don't have a cool Fox to click on, but what do you have that's fun over there in the land of the pit?
We have using Greeks to trade your positions next Saturday. We have all the stuff in our store. I will be starting our new gold basic course in January. If you want to learn how to trade options, come to optionpit.com and we will be happy to teach you.
There you go. Make the man happy. Let him teach you. Options. Optionpit.com is the place to go. They have a newsletter over there too. It's Andrew's Volatility newsletter. It's going to cost you a little bit of cash, but who knows? Probably save you some cash in this tumultuous, topsy-turvy volatility environment. So check that out over there as well. The Rock Lobster's newsletter. And on behalf of the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you for downloading, streaming, subscribing, sending in questions, voting in our polls, all the good stuff you guys do. Keep it coming. We love to hear from you. We love to see you. And hopefully we'll see you back here in about half an hour for Twifo. Otherwise, we'll see you back next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.